Hello, everyone, and welcome to our show that we call Hidden in Plain Sight. And the goal of this show is really to delve into the world of all things wealth management. We're going to sit down with some thought leaders, some industry trailblazers, and everyday practitioners to discuss some of the biggest trends, some of the emerging technologies, and perhaps some not so obvious opportunities to positively impact the industry and better serve clients. I am your host, Adam Scully Power of Evo Wealth. If you're not familiar with us, we're an award-winning goals-based asset management platform, really powered by a pioneering approach to asset allocation and portfolio design. And what we do is we allow every advisor to create the perfect fit portfolio for every client with just a few keystrokes. Now, my guest today is Mike Casciano. He is president and founder of Evo Wealth Consulting. Mike, welcome to the show.
Thanks, Adam. It's great to be here. Love talking with you, so it's awesome we can get something recorded together.
Yeah, I'm excited to have you. My opening to you is this. Your tagline, right, for your firm, Evo Wealth, is Evo makes complex wealth tech simple. Evo makes complex wealth tech simple. So tell us what that means. Tell us how you got started, a little bit about your background, and then we're going to jump right in with some questions for you.
Yeah, perfect. No, this was never a planned career. Never planned on becoming a financial advisor. From there, I went into work with an asset manager. I worked with BlackRock for a long time as a wholesaler, then was able to be part of the founding team when they launched the portfolio consulting business and retail. And then from there, they asked me to run a joint venture with a company called 55IP, which added wealth technology to models that were both off the shelf and custom for RIAs. And that really exposed me to this world like, wow, this technology, when you add it to the existing infrastructure, really makes a big difference. And that was kind of an early light bulb moment. So I'd left BlackRock with the principal, helped them launch models that were able to incorporate things like direct index and custom index, and started working with a company called SmartLeaf and another company called YieldX. So how do we embed individual securities and do tax management and personalization? So that just kind of evolved into a passion. And I realized there was an opportunity because, broadly, there's a lot of solutions out there, but it's hard to keep track and they're changing so quickly. And I think when you look at really good RAs, when you focus on growth, it's hard to also be able to dedicate time to focus on infrastructure and best practices and process. So the kind of light bulb went off again and said, hey, this is an open space. Everybody tells me that they would like some help here. So I had kind of a unique background with experience, and we started activating. And honestly, meeting with you guys about a year and a half ago now was really one of the big drivers. I said, wow, the stuff that they're doing, when I combine it with the other things and this kind of synergistic effect it's going to have on efficiency, like I said, I got to do this. So I went and launched the consulting business to help growth-focused RIAs.
Yeah, well, that's a great backstory, and you have a wealth of experience in this space, and really you've been at the forefront of some of these biggest trends for years, so I think you're really well positioned. You just mentioned the RIA space, and we see a huge trend of advisors shifting and moving to independence, and we see this growth of the registered investment advisory firm business. So my question to you is, one is it likely to continue? And what are you seeing in the whole RIA space right now?
Yeah, I mean, it's interesting when you look at where we are in this progression of how wealth management is, growing or being distributed. I mean, still the behemoths are the wirehouses, right? So your Merrills, your Morgans. Question for you. Do you know what the origination of the term wirehouse, where that came from?
I'm going to have you share with me and everyone, so...
Well, it's funny. I've been working in this industry for 20 years, and I never thought to question that until this morning. And wirehouses were called that because they benefited from the collective data and information of a centralized place of a larger firm. And so because they were literally connected by wires of the branches, they would call them wirehouses. So it's kind of funny when you think about that now. I think it's one of the challenges we see in the industry of this, you have these behemoths that have done an awesome job of working with clients and offering services, but literally their name kind of harkens back to a pretty much extinct technology of when things were connected by big landlines. So I think that's a challenge we see They have great resources. They have a lot of options. They've got great backing and infrastructure. They've got a lot of banking components, but I think they're saddled with a lot of old legacy platforms and systems that are hard to really update. I mean, it really gets to the point where, in some senses, you'd almost have to do a complete tear down and rebuild, which economically, like, not a great idea. And you definitely have to manage towards profit. So there's a lot of things that are going on within that legacy space that make it hard for innovation, hard to change. They're very big, they're not nimble. So it's definitely opened up this opportunity in RIAs where you can do what you want. You can add new technology. You can take a different approach that's not so much standardized. And I think that lure of independence has always been there. But now that technology has made it easier to move, to get set up, now you have all-in-one type of providers, or you have the ability to add things. The custodians have better platforms. You're just seeing this, a lot of things working together, which actually make it easier to go independent. And so I don't think that that is going to slow down. I mean, when you look at growth, I think the wires from a 2022 report were shrinking in headcount. RAs were growing at about 6% a year in terms of headcount. Like, it's hard to see that slowing down, especially with the focus on aggregators and private equity coming in and to incentivize that move. And look, a lot of the advisors, are older that are running these practices. And it's a great move for them to go and move to one of these spaces, get some independence, have, a succession plan or a transition plan. And I don't see that appeal slowing down.
Well, there's certainly some challenges, though, and you just mentioned it. I'll call it trade-off. So you have some legacy systems that are bundled and packaged and may make it easy to execute on. But as we move into the world of the RIA firms where it's more open architecture, they can build their tech stacks the way they want. That's great, but that can create challenges as well. What do you see playing out in the concept of building a tech stack today?
Yeah, in this industry, I mean, look, the whole point of it is to get a better experience for clients. How do we increase their probability of success, of successfully achieving their goals? What the major hindrance to that is, I think, is, do you have enough time to work with clients? And can you reduce the overall costs in a way that will provide less drag?
Yeah.
And optimize the way that you're managing their assets to meet those planning needs. So that, I think, is a real big differentiator where RIAs can be in, because the technology is allowing you to cut costs that used to be embedded and hard to get rid of. Or if you're at a big firm, a lot of the back end stuff is done manually, manual portfolio management. And so there's a lack of scalability. There's always a cost to human capital, whereas technology, we see it just keeps coming down in cost over time as there's more adoption. So I think that's your big driver of why there's an advantage if you can keep becoming more efficient, if you can keep adding more time within your schedule to work with clients and go through the planning and be able to communicate and have better ways to communicate that message. Like, I see that as a real big differentiator of that client experience, and I think what's going to help drive growth.
Well, I mean, that's what drives us here at Evo Wealth. I mean, it's enhancing the client experience through more personalized asset allocation and portfolio design, but not at the expense of firm growth through scalable efficiency. So it's how do we have both personalization, but be able to do that with the scale and the operational efficiency to grow as a firm. So I couldn't agree more. Let me ask you this. What are from your perspective, some of the, what I'll call like widespread industry practices that you see being used today that you think might be ripe for disruption, if you will?
Yeah, I think it's the dedication towards manual tasks, critical, but manual tasks that the client doesn't actually perceive the value. Right? I think it's important as we think about what's the client experience, because I've had the privilege to work with literally thousands of advisors across all channels. And when you're doing something for a long time, right, and you're doing it in similar ways, you get very tied to the value in your actions and your tasks. And look, there's advisors you go back that originally were brokers and they bought stocks and bonds, and that was their job. And now you're in an era where you're seeing this move towards planning. There's this adoption of, hey, we're going to focus less on trying to deliver excess returns, and we're trying to deliver, a better journey for the clients. And, that doesn't really match up with the old of, hey, I'm going to go hunt for stocks and bonds that are going to give you, advantage over, your neighbor or somebody else. So it's kind of rethinking and relearning from an advisor perspective of, while I recognize the value and it's important to me, trying to sit on the other side of the desk and say, well, what's important to my client? And whether it takes you 10 hours to go through and manually manage taxes and do a really good job and buying and selling and understanding, should I make this trade now or later to go from short-term to long-term gains? Or do I trade this because I'll bring the tracking error of the portfolio down by 0.5% or not? The client doesn't see any of that. And honestly, they don't really understand it. So whether it takes you 10 hours or 10 minutes, it has the same effect if you're doing it just as well or potentially even better. They don't see that work of toiling over spreadsheets. So I think the more that we can help re-educate and get this adoption of, hey, I'm willing to embrace a better way to do it. And maybe it takes a little bit of effort in the short term. But if you think about the benefits, I mean, they're exponential on the back end of what it can do, not just for scalability of practice, growth of practice, but it's really about, can you spend more time with the client, and can you spend more time messaging and more time on planning? Because we know that that's a big driver of client demand and what clients are using to determine, how happy they are, with their advisors and their experience.
So you just mentioned tax optimization is one. Give us a few examples of other areas that you think there can be improvements made to better serve clients, or areas that are going to help the advisor serve clients better and clients see the value in that.
I mean, there's two topics that I think are really, really big thematic drivers that everybody's talking about in our industry. So one is clearly personalization. The other one's AI. I think they go hand in hand when you look at them, but it's really, how can you create an experience that is better? And so in terms of personalization, right, there's a big push on ESG. We'll see where that ends up, but that doesn't discount the fact that clients have preferences and clients are unique, and each portfolio has its different, call it constraints or inputs or preferences that you really need to abide by. So if a client really doesn't want to pay taxes, obviously that's one thing. So that should be a constraint. If the client really doesn't want to own certain kind of companies, or maybe doesn't want to own mutual funds or ETFs, or doesn't want to own individual stocks, I think being able to cater to those preferences. And then two, as we get into more high net worth, you get into these concentrated stock positions or legacy positions that maybe were gifted from a grandparent that have sentimental value, something like that. Those need to be considered in the portfolio. And in order to do that, you're going to need to manage individual securities, especially on the equity side. So the trend of moving towards, ETFs have been growing rapidly. And of course, they're very efficient vehicles. Mutual funds are not going away. But I think you're seeing more of this move back to where we were in the 80s of more individual securities within portfolios, because it really you need that to allow for personalization and I think more efficient tax management.
Well, we certainly see this every day. I mean, we talk to advisory firms literally every day here at Evo Wealth. And I agree with you. One of the things that we hear, especially as it relates to personalization, is the ability to take a broader set of inputs of the unique client situation into first the asset allocation, and then secondarily into the portfolio design. So it's more client inputs in to create that optimal mix. And then when we get into the portfolio design, what we see, and you mentioned the high net worth, the kind of ultra high net worth space, is how do you optimize and build portfolios around not just liquid traditional markets, but start to incorporate alternative markets and illiquids like private equity and private credit. And that's one of the things that we're really focused on. So we can go from all levels of clients all the way up into the whole ultra high net worth space. Let me ask you this. I'm going to play a little game. Imagine for a second that we are at the Wealth Management Olympics, okay? And what I'd love to get your take on is, who do you think the gold medal winners are going to be? Who's likely to surprise and get on the podium that weren't expected to? And then who are some of those players that were expected to get on the podium, but for one reason or another, they struggled and they came up short? So why don't we start with the Evo Wealth gold medal winners, in your opinion?
Well, like this has been a concept in the industry for a long time, but the winners through time are the companies or products or solutions that are going to be able to get closer to the client. Right? Everybody wants to be closer to the client, and the further removed you are, like the less control you have, the less stickier your solutions are. So, first of all, the clear winners are the advisors. They're closest to the clients. They've had a lot of natural appreciation through markets over the last 10, 15 years, and even going back last 35 years, right? S&P 500 going back to 89 is 10.5% a year. So these are major drivers of growth. People are living longer. All this stuff is great. The real gold medal winners are going to be the ones that can actually take that backdrop and leverage it and scale it in a way that makes things simpler, right? Like, so with Evo, we want to make wealth tech less complex, more simple. I think it's the same thing with you're seeing a transition to how these firms are able to demonstrate to clients, hey, here's where you are, here's what we need to get to, here's why we're doing this. And look, I think there's a lot of firms out there that have 70-page reports as a proposal for a full planning. And while those are great, right, it's really up to the advisor to be able to bring that value and bring those to life. And I think part of the winners, clearly, firms that are adopting technology and focusing on the client, creating more time for client interactions and more capacity, or the ability to bring on more advisors into a larger system because they have the scale of a platform that services that and makes it easier and more cost efficient. So clearly winners. When you look at the makeup of the advisors, everybody knows we have an aging, whether it's 58 or 59 or whatever you want to put that number out of the average age advisor. It's an aging. It's hard to get into. I was one that was a failed advisor because it's really hard to be broke for 5 to 10 years, until things start going well. So the barriers are huge. The valuations have gone up significantly. So there's not really a need for a transition plan because you have all these firms that have evolved and saying, hey, we're willing to take your business and work through a transition plan if you don't have succession in your practice. And I think
the aggregators, in essence.
Aggregators, platforms, I mean, there's a ton of companies that are offering different versions. Like, I think this is one of if you really want to be a winner in this industry, right, you build a great platform and then you have optionality for advisors and how they can participate in that. Do you want us to wire your business and become a shareholder? Great. Do you want to tap into our platform and still maintain independence and own your clients, and you're not looking for that buyout or that acquisition? You say, hey, I've got runway where I want to grow and I want to own this and maybe I'll monetize it later.
Yeah.
They just want to borrow parts of the platform, right? This evolution of there's going to be way more TAMPs, right? More availability to put investments into a portfolio that are more portable. Maybe they want certain parts of the service. So as you think about, like, those are definitely the clear winners. I think all advisors are winners. If you manage a good book of business, like, the market's helped, clients are happy, like, you're in a great spot now. Yep. So I think the future's bright for everybody there.
All right. So we touched on the winners, silver medalists. Those give me an example of someone, the underdog, if you will, that somehow leaps ahead and finds himself on the podium when no one expected it.
Yeah, that's a good question. I think really you're looking for firms that are able to help bridge the gap between just well-known deficiencies within a process. I also think it's going to be very tied to data management. I think that's the one area that is really going to unlock significantly more optionality within the industry, especially for independent advisors. So the cost of owning your own data and having your own data infrastructure is coming down. And I think right now, to do that, you need to go to more than one of these all-in-one solutions that have that and they can pass it and connect it. And there's always challenges with that. But as that comes down, it offers more independence. So I think there's a few firms that are looking to solve that problem of, hey, how do we create a platform that you can now own your data? So cybersecurity is a big part of that. So firms that are they're going to become way more important as we go through. You're going to have airtight cybersecurity.
Yeah.
The firms that are able to make it easier to add these new solutions and kind of create almost like this data backbone or infrastructure where it makes it easier to swap things out, like those I think are going to be the winners. And then, look, I mean, shameless plug for you guys, but you've been able to identify something that everybody acknowledges is a challenge, right? There's a gap between where the financial plan ends and the outputs there to then guiding on, well, what's the optimal portfolio for this client today? And those are the types of solutions that I think you're going to see massive adoption. And it's firms like yours that have worked really hard at it for a long time. It's institutionally focused. It's not built for retail or built to be bought. It's built for the long term based on, very, very thoughtful institutional type approaches towards investment management and planning and managing towards goals. So yeah, those to me, I think are going to be you're going to see these surprises where these firms just emerge, and it's this combination of taking really hard things or things that aren't connected, connecting them, allowing you to push a couple buttons, and now what used to take a week to do or a day to do, if you can do that repetitively within a couple of keystrokes in 10 minutes, like, wow, like that's the wow factor that,
well, that's what we're focused on here at Evo Wealth, is exactly that. And what you just described, that gap between financial planning and asset management is what we solve for. And it really inspired the name of the show, which is Hidden in Plain Sight. It's one of those things that sort of everybody knows. We've surveyed hundreds and hundreds of advisors. The numbers are 89% see it. They recognize it's a problem, but they've never had the tools to actually be able to connect the two, the client's unique financial plan with a personalized portfolio at every stage of their life. And we think we're doing something really unique and special here. All right, my last question, and you thought I was going to let you off the hook, but I'm going to put you on the spot. Who are some of the potential, let's just say, non-podium participants in this Wealth Management Olympics?
Yeah, I think you're looking at traditional type of solutions that they're not investing heavily, in R&D, in how do we make it better, and that could be both on the technology and platform side. I think it's also on the product side, and if you're going to be maintained, especially in the world of asset management, like we don't need more products. Like we can solve client challenges with everything that's on the shelf today, and we've got way more beyond that. I think it's really more about, can you provide value beyond potential alpha or delivering a product? And I think the firms that aren't focused on understanding what the process is of their clients, understanding where their shortfalls are, understanding practice management, I think it's a word that's, it's widely overused in the industry, but it's really, how do we help people run a better business? And I think if you're creating support like that, or you're looking to bring on and invest in technology that makes it easier for advisors to consume your solutions, if you're not doing that, I feel like you're going to be challenged as things move more digital, traditional wholesaling changes. If you don't have the benefits, like, look, everybody can go to a website, or everybody can go to some kind of marketplace or Morningstar and screen for performance and price and betas, correlations, all that stuff. Like, that's there. So the firms I think that are going to be growing are the ones that are not going to be looking for, hey, come tell me your new product so I can put this into some accounts and then we'll repeat in a month or two.
Yeah.
Can you really help them with their core challenges, which is compliance, tech, growth? How do we bring on new people? How do we make our messaging better? I think that's the areas that if you're not investing in that, like, it's going to be a hard road to compete, especially as more of the assets move towards the independent side, the ones that are in motion. Like, I think it's going to be harder and harder as more of the products within the larger firms become a bit more proprietary, and they move from the traditional, vehicles or investments that they used in the past.
Well, there's no question the information is out there, the tools are out there, the solutions are out there. I think what folks need is insight, and they need folks like you. So I think what you're doing at Evo Wealth is really on the forefront of helping these advisory firms navigate what is a complex and can seem challenging environment, and make wealth technology simpler. And so kudos to you. Congrats on the new firm. I'm glad things are going well, and we'll look forward to keeping in touch. If folks want to get in touch with you and learn how they can work with you, tell everyone how they find you.
Yeah, a couple easy ways. So website, www.evo-wealth.com. We're always creating new content to make education simple. We're trying to make it as short as possible. We know that's the key. LinkedIn, look for me, Mike Casciano. Reach out to me there or through Evo Wealth Consulting on LinkedIn. Those are the two easiest ways, but hopefully we're producing enough content where you'll know where to get it as we keep looking to expand our reach on a go forward.
All right. Well, Mike, thank you for joining us today on what we're calling Hidden in Plain Sight. Really, the goal of this show is to talk to folks like yourself, thought leaders, visionaries, to really help shape the future of the industry and most importantly, better serve clients. So until next time, look for us. And Mike, thanks for being here today.
Thanks, Adam. Appreciate having me on.
Have a great day. See you.
Yeah.